Gold has bounced nicely over the last several weeks, and last time we looked at gold, that was a few weeks ago, we did expect some sort of a bounce, although to be honest I said that there is less than 50% chance that this bounce would be the rally into a new intermediate cycle. By now though, based on the strength of this rally with the new highs, it's pretty clear that we are in a new intermediate cycle, and the previous intermediate cycle has completed, lasting for slightly less than average at 152 days. The average for these intermediate cycles in gold is somewhere around half a year. So now that we are in a new intermediate cycle and approaching the recent high around $2,100 on gold, let's see what's the outlook in the short term as well as intermediate term. As usual, first I would like to have a look at the US dollar. This is the US dollar index. It too has started a new intermediate cycle since early February, and we have talked about that in some of the previous videos. The first short-term daily cycle within this new intermediate cycle is now 62 days long, and usually these daily cycles on the dollar last for around a couple of months. So based on this average duration of these daily cycles, and because we have some support zone from the previous lows, that's in early February as well as in late March last year, I think after maybe a few more days of downward momentum in the US dollar, perhaps sometime next week, we might see the start of a bit of a bounce into a new short-term daily cycle in the US dollar before this intermediate cycle downtrend takes over and the dollar continues generally lower for another several weeks. We see that RSI is now at 36, and if dollar continues down, it would come pretty close to that oversold level again, emphasizing that probability of a bit of a bounce, perhaps up to the 50-day moving average, or at least to the middle of the Bollinger Bands, would be quite likely. Coming back to gold in the short term, based on the duration of this short-term daily cycle, the first in the ongoing intermediate cycle, and based on what we expect for the US dollar, gold is perhaps likely to continue pushing higher just for another few days. This daily cycle is 37 days long. Usually, again, these daily cycles on gold last for perhaps around a couple of months. And with the previous one being unusually long, perhaps the current one might turn out to be slightly shorter than usual. So another few days higher to poke again above a very wide Bollinger Bands. As I mentioned many times in my previous videos, poking above wide Bollinger Bands does often signal a bit of a turnaround in momentum, perhaps a bit of a short-term cool down into the first daily cycle before the intermediate cycle continues higher. And again, looking at this 14-day RSI, if gold continues higher for another few days, if we don't see any explosive moves higher, we might actually see a bit of a negative divergence on RSI, which is a higher high on price with a lower high on RSI, which also often indicates a bit of a turnaround in momentum, at least for a short term. But again, that is a short-term outlook. In the intermediate outlook, the intermediate cycle is still very young. These usually last for half a year or so, so we would expect 3 or 4 months of general upward momentum. By the way, if gold continues higher for another few days, it might actually come close to these all-time highs, somewhere around $2,080 per ounce, which is likely to provide at least that short-term resistance for that temporary bounce down into the short-term daily cycle low. Perhaps the target would be retesting the middle of the Bollinger Bands or retesting that previous intermediate cycle high somewhere around 1960. So that's the short-term view. In the intermediate term, as we are approaching this all-time high around $2,080 and we are still early in this intermediate cycle, we are likely going to break above this resistance zone. Again, that's just because we are still early in this intermediate cycle, so perhaps after a bit of a bump down from that resistance, in the second daily cycle of the ongoing intermediate cycle, we might actually finally break above. What would be the targets? Hard to say. Somewhat of a round number there is $2,200. After that, it would be customary to retest the breakout from a long-term resistance, and that might actually turn out to be our end of the second daily cycle. After which, a short-term bounce into a third daily cycle followed by an intermediate cycle decline. Perhaps again back below this resistance zone to shake out all of the weak hands After all, the market does have a way of shaking out the majority of weak hands before continuing higher into the next intermediate cycle. So that's our outlook from a short term into intermediate term and touching into the longer term view as well. Talking about this longer term view, let's have a look at Fed rate expectations. Of course, with the nearest meeting coming in early May, the market is more inclined to expect no changes in the Fed funds rate, giving a no change scenario somewhat over a 58% probability, while there is still 42% chance that the Fed might hike by 0.25%. But again, moving from the short term to the intermediate and longer term view, looking at these Fed rate expectations into the end of the year and the beginning of 2024, looking at this ease column, that's a decline in Fed rates. We see that the market expects a nearly certain decrease in interest rates into the end of this year, that's with a 97% probability, and into early next year with a over 99% probability. So again, if not in May, and if not over the next couple of months, sometime by the end of this year, rates are expected to decline, which again aligns wonderfully well into significantly higher gold prices, perhaps into the end of this year, into the rally of the next intermediate cycle after the ongoing one. Another piece of data that looks quite interesting is commitment of traders, the COT reports. So the reason why it is interesting is if you compare the COT reports at the previous highs around these $2,000 to $2,080 per ounce, comparing those highs to what's happening right now, again above $2,000 per ounce, we see that at those previous highs, the speculators, this green line, was at significantly larger positions than they are right now, and the smart money, the commercials, this red line, was again at significantly lower positions than they are right now. Usually the smart money decreases the positions into local highs and vice versa with the speculators. Currently the speculators aren't as high as they used to be at a couple of those previous highs around $2,000, so there is still some potential for the prices to push higher before these speculators catch up a little bit to buy the top. And conversely, looking at the smart money, again, there is still some potential for prices to push higher. The smart money still expects the prices to push higher as they haven't decreased their positions down to where they were at the previous highs yet. This again is relatively bullish sign into the intermediate term, into the top of this ongoing intermediate cycle. And while we are comparing cycles, as I mentioned in some of my relatively older videos, this previous decline into the intermediate cycle low into September last year was very exhausting. It reminds me what happened in August, September 2018. Again, that's when we experienced a very long decline into that intermediate cycle low that would seem to never come. And if we compare these two periods versus what happened to GDX, percent of the GDX components above the 200-day moving average, it shoots up out of that exhausting low, corrects without touching that green line before shooting even higher, pretty close to the 100% level. And what we have observed in the intermediate cycle after that exhausting decline is again a shot up higher in this percent above 200 DMA in GDX, bit of a correction down into the intermediate cycle low without touching this green line, and another push higher. I do see similarities in these periods, and if history repeats, we might see a higher high on this index over here and a significantly higher gold price, as during that intermediate cycle rally where this index topped close to 100, gold managed to rally by around 22%. That's not too bad for gold price. A similar 22% rise into the ongoing intermediate cycle would bring us actually pretty close to that round number that I've just mentioned, around 2200 on gold price. Would you look at that? So the stars do align over here, possible repeat of the history as well as the chart technicals over here, which indicates a relatively high probability for this scenario. And as usual, I would also like to have a look at gold optimism index, and again I would like to compare it to what happened back in summer into September of 2018. Again, a very grueling decline into the intermediate cycle low. Similar thing happened all the way down into September last year. And looking at the Optimism index on gold, that's when we saw this previous example of a significant drawdown in this Optimism index. Same thing happened in the middle of last year, significant decline in this Optimism index. All throughout 2019, 20 and 21, we didn't see such a significant drawdown in this Optimism index. So again, the similarities between these periods are quite pronounced. And again, what happened in 2019 is that Optimism index rallied to just above 60, followed by a bit of a decline into that intermediate cycle low without touching this green line, a decline below 40, followed by a push higher with 22% rally in gold price and this Optimism breaking above this red line. Something similar has been happening so far, a push higher in Optimism index into early this year, close enough to that level of 60, although this time it didn't push as high as that. A decline below 40 again without touching that green line, and we are now observing this significant push higher. I do expect the intermediate cycle to top with this Optimism index, perhaps pretty close to the red line. So we still likely have some potential left within this intermediate cycle, although with the members at myfinancesteacher.org, we have already been holding our precious metals related positions for a while. And in addition to that, I do regularly go out on a quest to find some of the most promising explorers and developers that might have additional torque, that might have additional explosive power if precious metals do finally make a new all-time high. So make sure to check us out at myfinancesteacher.org, where I post all of my trades in this model portfolio, and the membership is only $10 a month, which is basically nothing in the current inflationary environment. Have a nice day. Bye bye.